Your Next Big Move podcast for anyone involved in the buying and selling of businesses that wants to know how to do it right. Hosted by Zoran and brought to you by Exclusive Business Sales. Sell your business with certainty.
Hello everyone, my guest today is Greg Boyer, founder of Boyer Advisory and author of the book The Business Owner's Guide to Living Happily Ever After. The best way to describe what Greg does is to call him transition advisor. Greg helps business owners prepare for exit through preparing their business for transition, making financial plans, and most importantly, preparing owners for life after business. We talked about many points that are often overlooked in business exits, different exit options, and experience he gained by exiting business 3 times. So let's get into it. Hi Greg, how are you doing?
Good, thanks, Zoran. How are you?
Oh, going well. Thanks for coming. Look, the reason why I wanted to talk to you because you are transition advisor. So you help people plan for exiting the business, but you do this a little bit different. And when we originally talked, I was quite impressed with how you go about it and what you actually do for people when they decide or start thinking about selling businesses. So tell me a bit about it. What exactly do you do?
Yeah, Zoran, it is a different way of looking at how to transition out of a business for an owner. How I got into this was because I saw that many owners, after transitioning out, were still unhappy with the results that they did. And upon further research into it, it was because mainly they had just focused on their business only in the transaction, which is fair enough because it is most of the time their biggest wealth asset. But it showed after there's a number of surveys that get done mostly over in the States, they do it yearly. They ask all these owners 12 months after a sale, how are they going? Are they happy? Are they glad that they did their sale? And this is what got me into the advisory work. When I found out that 3/4 of them, 75% of these owners, actually regretted doing the transaction, I thought, wow, what's the problem here? And it turns out that the reason for those regrets were 2 areas that were not focused on at all by the owner prior to selling or transitioning out of the business. They were fully focused on the business only, and they didn't really look at what their financial aspirations were and what they were going to do for their next phase of life, next stage as I call it, and understanding how much of their financial needs were going to come out of that business transaction. But also one of the other important factors that they didn't consider prior to the transition was personally. What was their personal plans? What was going to get them out of bed every morning after they did the transition? And it was those regrets that came out of those 75% of owners. A majority of those is because their financial goals, what they thought beforehand, were not reached. And their personal goals, what basically gives them purpose in their life, they hadn't thought about. And after the sale, it was too late. They couldn't resurrect anything, and twiddling their thumbs or feeling like they had no purpose in life.
Yeah, it is. With a lot of business owners, their life their business becomes their life, and it becomes their identity as well. And all of a sudden, that's no longer. It's gone. It's with someone else.
Yeah.
So it's a pretty hard transition unless you actually do some serious thinking before that happens.
Yeah.
So how do you go about it? Explain to me the process. Okay, let's say I want to exit the business, or I'm thinking in 5 years exiting a business. How would the process look like? What do I need to think about? And how would we work together?
Most business owners will look at their business and say, okay, is it sellable? Shall I contact Zoran because I want to put it on the market for sale? They may not look at it from the investor's perspective. So there are business elements that may need to be improved. Some of those elements could take quite a while to do. So ideally, they're done well before the business owner's ready to transition out or put the business on for sale. But they probably need to ask themselves quite deep questions personally about really what do they really want to do, what's their vision, think about what life's going to look like in 3-5 years' time after they sell the business, and is that going to make them happy? Is the reason for selling to get them to that happy place? I call it living happily ever after. A lot of the time they never think about that because they're too busy solving the problems they've got today in their business and are just thinking about the next step, which is, okay, I've had enough, I want to sell the business now. Once the business is gone, so is probably their opportunity to make sure that they can properly fund their desired lifestyle, which they may not know what their desired lifestyle is until they're actually out of the business, and then realise that, hang on, my desired lifestyle is I still wanted to be in the business.
So you need to experience it.
So so what I was going to say is that these owners need to be asked a lot of questions to think about forward that they may never have thought about before.
So what are the questions you ask them?
Tell me, what gets you up in the morning now? What gives you purpose? What makes you get out there? Is it, how much of it is your business? How much is it outside your business? If the business was to go, then what would you do? And you hear stories like, oh yeah, but I can't wait to get out because I want to travel the world. And
so what's wrong with that?
That's great. How long do you want to travel the world for?
That's a good question. I don't know, for forever.
Forever.
but okay, go on.
Others, say, okay, look, I want to get my golf handicap down. That'd be great. So, okay, that's great. So how many times do you think you'll be playing golf during the week? Oh, at least 3 or 4. Okay. So there's 4 times 6, there's 24 hours. What are you going to do for the rest of the time? Because after you've got your golf handicap, what else is going to give you fulfillment?
When you talk to them, do you see the moment when the pin drops and goes, oh, yeah, really? I actually don't know what I'm going to do.
Yeah. It is so common.
So when you get somebody to the point that they don't know what they're going to do, how do you help them discover what they want to do?
Well, you can throw up a number of different things that they may not have thought about. And it can be, do you really love business? Well, have you ever thought about doing something different, but not in the current business you're in, but something different? They may want to go out from being an owner to being, I still love being in the industry. I might become a consultant. Or others may say, you know what, I just want to spend time with my local sporting organisation. The soccer club is, so I might become president and dedicate a lot of my time there along with my wife, whatever it is. But it's asking them from a really a fundamental deep down position.
Existential questions.
What will give them fulfillment? What will make them feel happy to get out of bed? What will give them purpose in their life? So everyone's different.
And how many of those answers do you arrive to? They're like really, really grand and big and I want to change the world. And how many of them, no, I just want to have a happy life with a small group of people around me doing stuff that I love, like, interested in.
Entrepreneurs, and most business owners are entrepreneurs, there's probably 2 types. There's ones that still want to change the world, even after their current business.
Yeah.
And great, if that's what they want to do, how you then ask, okay, have you got any idea how you're going to do that? What's, just delve down a little bit deeper just to make them think about how they're going to get to their destinations. But there's also many of them who are just quite happy to say, you know what, I want to be with my grandkids. I want to spend time with them. I want to do more things with my partner. Or I've been dying to do this hobby for a long time. I know I want to really get into that. It is individual, and you can't pick it on the type of business or the size of the business that the owner has. It is really down to what is deep down driving them to enjoy their life.
The reason why I'm interested in that, because through business sales, when we work with the business owners, we're transactional based. They come to us. Our job is to package everything together, go to the market, find a buyer, negotiate a deal, and get them across the line. Sounds simple, but it's not. So where we often hit the obstacle is when the deal is done and they're about to sign. And that's when they start thinking about these things. Do I really want to do this? What's going to happen to me after I exit the business? And, I said this a few times, if I had $10,000 every time that the owner said, look, I can't do this, I'd be a rich man.
I call that one, Zoran, that's the cold feet syndrome.
Yeah.
Where at the 11th hour, everything's done, and then all of a sudden they do think about what I asked them to think about probably 5 years beforehand.
Correct.
And they go, they get the shock. It's a shock going, oh, hang on, what am I going to do next week?
So you have to have a clear goal, and vision of what you're going to do when you exit the business. I think it's a really, really important part of the process. So when you're talking to somebody at the beginning and they want to exit, starting to contemplate exiting in business, is that where you start?
Yeah, there's three parts to the process.
Okay.
I go through a discovery step, and then the discovery is asking basically where are they now with their business, personal, financial situations, and where their goals are. And it's the goals that are a lot of the time can be known, can be unknown. And if they're unknown, well, we just go through the process, ask the questions and get them to think about it and go, well, you're going to need to think about this. What is your happy life? If you could snap your fingers today, how does your life look? If you were to say you want to go to your nice place, and eventually it comes out. It is deep down, but eventually it comes out.
You just got to start thinking about it. Yeah.
So if you know the destination and you understand, then assess where they are today, there can be gaps. So the second part of the process is to, when you understand those gaps, is to put in place strategies and recommendations and so on into a plan to say, how are we going to close those gaps?
And okay, carry on.
And then once you've got that plan in place, and I call it the Transition to Freedom Blueprint, what I call is my transition plan. There's basically your blueprint about how you're going to get to your end goal, selling business, knowing that your financial and personal goals are also being met. Plans are great, but most of the time they're useless when they're gathering dust. They're only good unless step 3 of the process is put in place, and that's actually actioning the strategies and making sure that they're done and these gaps are closed. And if they can get to a position where they can close those gaps or they know they've got it in place, it gives the owners a lot of peace of mind that they're confident that they can take it to Zoran and get the results that they're after.
And you know exactly where you're going, and you know exactly what the purpose of all of this is and what's going to happen afterwards. But you mentioned gaps a few times. What kind of gaps are you talking about? Is there financial gaps? Expand on that a little bit.
Business, I call it 3 pillars to freedom and happiness, and that's ensuring that your business goals are attained, your financial goals are attained, and your personal goals are attained. To get to those goals, there can be gaps of where your business is at, and a lot of business coaches cover those gaps. It can be owner dependence, it can be cash flow, it can be too much concentration on one or 2 customers, whatever it is. That's kind of, let's call it normal business strategic assessments to know how to fix up the business. But the ones that get missed a lot are the financial and personal gaps. And financial gaps could be that the structure of the business, the way it is done, the end money that comes out for the business owner, a lot of it's gone in taxes to the government, or there's a better way to do the tax minimisation within the structure. Or it could be that they need to find a financial planner to actually put a financial plan in place to know with the money they get from the business can actually then create an income for them in their next, wherever they go to next, their next chapter. So they may not have done any financial planning. That could be a gap.
Mm-hmm.
There could be also other gaps within the financial side of things about how the money is then kept in trust or passed down to the family. They may not have any wealth plans. They may not have estate plans or wills and so on. So there's all those. There's insurance. There's a number of different categories that come under the financial area. That's not just business. It relates to their personal side of things. It looks at their other wealth assets. Could be their house and what are they going to do with that. That won't make an income, so you don't treat that as part of their money they need for their next phase. There's a whole lot of different categories that need to be looked at under the financial side of things that could be gaps.
So I decided what I want to do, and then we go backwards and say, well, let's see what you got now and how you're going to get to there, and then you start working on these gaps. So you mentioned improvement of business, and you mentioned coaches, and you mentioned financial planners. So you're kind of project manager for the process, and then you bring external advisors to help you through the process. Am I understanding that correctly?
Yep, that's exactly how it works. If I see for the owner that they have, let's say within the business, their financial records and so on are not in great condition, well, they need accounting assistance in that. If it's a issue with the way the business is structured and there's potential tax issues, then they may need a special tax lawyer to come in. I will help the business owner find the right people if they haven't already got those people working for them already. And the same thing would happen with an owner that says, I would like to sell in a period of time. Well, I'd say, well, I know the right business broker that you could speak to. It's Zoran. He can come in and give you some advice about where the market is now and the sort of process that you would need to go through and things that you need to look at to get ready to sell at the maximum value. So it's getting the right advisors in for those gaps.
It would be wonderful if every seller comes to us as one of you on the other side, and they were prepared. I'll tell you honestly that most of the people have never done any planning for exit. And I think it's crucial. I think what you're doing, it's fantastic. It's a long term. There's a couple of things that people say about it. Like you should start a business, thinking of selling a business the moment you start it. That works in some instances. I to some part disagree with that. When you're starting a business, just stay alive, all right? If you're a young person and trying to get into the business, just pay that bill. Just don't worry about selling it. You just survive, all right? Once you start making some money in the business, getting to the next stage that is becoming a business, not just a job, then you can start contemplating and start thinking. But again, depending on your time in life you are. But there it comes when you hit a certain age, and I'm not even talking retirement age, and the maturity of the business, every business owner should start talking to people like you and said, okay, if I was to exit, what do I need to do? How does that work and everything else? And that's where those questions that you just mentioned about, okay, well, if you want to exit, what do you want to do after you're exiting? And that's very often they go, well, I don't know, I was just thinking about exit. So just the process of thinking why you're doing a business, why you're accumulating wealth, because business is about money, all right? And what you want to do with that money and for how long will help you arrive to decision if a selling business is good and give you a real reason to sell that business. So the process is going to be much better. And if you're in that frame of mind, that you actually understand why you're doing this, you'll have a much better result on the end because you're working towards something. All right. Now, can you explain the process a little bit? So the discovery process. Are there any details that you would like to share with us there that you find very interesting and very important when you're going through a process? The ones that some questions that stand out that are more important to than the others. So I'll tell you what I'm getting at. All right, look, when we're asking people, we got a question that we go through when we exit when people come to sell the business, and one of the questions for us is, why did you decide to sell a business and why now? And that really stops them in their tracks and really makes them think, and some good information flows out of that. Do you have something like that?
Yeah, there's when I go into the detail process, it is very detailed. It's probably
How long does it go for?
The actual discovery process could go for a month.
Okay.
I go through interviews with the owners, with their spouses, with other key stakeholders that they identify who will be affected by the transition eventually, to understand that if everyone's on the same page, sometimes the owner has no idea that their spouse has a totally different way of looking at things.
What do you mean sometimes?
I think there's a lot. I've heard the saying about, I married you, darling, for sickness and for poorness, but I didn't marry you to have lunch with you 7 days a week.
Okay.
And that could be a lot of the problems afterwards where they're sitting around in the lounge going, hang on, you used to, for the last 30 years, you've been out at work. Get out of a house sort of stuff. Yeah. But during that detailed assessment, as I said, it's 300, 400 questions. I go through about 60-odd categories in those financial, personal and business sections. And it is trying to find out, why, like you touched on, why do they want to do it? Other factors like what's really important to you in your business and your personal life, because you've no doubt experienced this a number of times, Zoran, about how owners will go through, they're just focusing on the sale, and then, as we touched on, the cold feet syndrome. A lot of that can come from thoughts that have just bubbled to the surface. It should have been asked years before, going, hang on, I'm selling to these people and they're going to change the name and it's in my name. I want my brand to be maintained. Or I know a lot of my employees are going to go, hang on, that wasn't part of the deal. I don't want... All these sort of things should be well and truly known beforehand so that they can put this part of their terms of sales. So I ask those right at the front end to say, have you thought about, if you did go down an exit process, how much do you care about your employees? What really gets you, what apart from making a profit, what else makes you happy about your business? Is there anything you want to maintain? Is there a legacy? Those sort of things. That's on top of the normal, understanding revenue. What's your growth been? Where are you compared to the industry with your profit levels? All those are, I'll call them standard comparable checks against where they sit for their valuation, which you're very aware of. But it's also understanding what other parts of the business are performing well, which can be used in the promotion of the business when it is taken to market, but also understanding, are there glaring issues there that, might take ages to fix, or maybe a quick fix, hopefully, that they're then aware of. The biggest thing I find with the whole transaction process is to minimise the shocks to the owner. It's only when the shocks come up that they think about, what am I doing on this process?
So what creates the shocks?
The unknowns, things that they weren't aware of. They weren't aware that they had a weakness in their business, that the acquirers put an amazing offer on the table initially, and then they start to go into due diligence, and then all of a sudden they find out this big issue in the business and the price
problems, risks, yeah.
Yeah, and they start tearing off, the value to the price. if all those things are understood very early days about where their weak links are in their business, in their finances, and in their personal side of things, they can address them. And they still may be weak links when they decide to go to market or transition out. And I deal with not just owners who sell businesses, I deal with owners who transfer their businesses to their family. They may sell them to the employees as ESOPs or maybe management. There's 8 different exit options, but so I cover all of those. But the fundamental part for me is to make sure that they understand where they sit with and what weaknesses they have in their enterprise.
Mm-hmm. So that's when we're talking about business. So we covered a bit. So first they need to decide, exiting owner needs to decide exactly what he wants to do and what drives him. And then we look at the business. Well, actually there's a part between that. You don't look at the business yet. You got to figure out how much money you need for after the departing your business. So that's driven by the lifestyle that one desires after the exit. So is there any formulas or any tips or anything you can give us to that to actually...
First of all, really think deeply. I said it earlier, snap your fingers. If you could live your desired lifestyle as of today, your happy ever after lifestyle, what would it be? So understand that first. Once you understand what you want to do, and it could be travelling around the world for the next 30 years, whatever it is. It could be sitting on a beach, it could be going farming, it could be buying, whatever it is. Then you can actually do a financial analysis to see, okay, how much do I need? How much is that going to cost to live that desired lifestyle? Once you understand that, you then basically backward engineer the costing. Say, okay, I need this to fund it. How do I earn that amount of money? How much capital do I need?
Through sale of the business and through outside investments.
And there are other investments. So I call it, I do an analysis on 3 financial parts. One is a wealth gap, one is a value gap, and another one is a profit gap. And I'll run through those very quickly.
Okay.
A profit gap is a business that is earning under the industry standard of profits, percent to revenue and so on. Is there opportunities to improve that profit? Maybe, maybe not, depends on the business. But whatever it is, it's called a profit gap. Then there's a value gap. What is the standard business values? Let's say at an air conditioning company, what is the normal multiples that this would sell for? Based on this business to where it sits today, where would it sell for? And if it is under the multiple, there's a value gap there. There is potential that somehow they may or may not be able to improve the value. But the biggest issue is the wealth gap, and that comes down to their desired lifestyle that they need. What do they need to fund? The wealth gap is effectively what they've got money that they need, total money outside their home that they need to live their future desired lifestyle. They can get so much money out of their business, and then what other assets that they have as investment assets. And if there is a gap there, somehow that has to be filled. And it's either growing the business to fill the gap if they can, or they might actually have to drop the money.
Lower your expectations.
Lower the expectations. And if I go back to one of the reasons I got into this was when I heard that 3/4 of owners regret the sale because they didn't calculate their finances properly and they end up having to do other jobs or not do what they hoped they were able to do because they don't have enough money, or they were personally empty. They realised that the business that they had was part of their lifestyle. They didn't realise the loss it was doing. They don't have purpose or fulfilment in their life. When I heard that, that's when I thought, hang on, I'm being lucky myself because I've gone through 3 exits myself. I've been able to get to a point where I'm in that happily ever after space because that's why I'm doing this job, because I actually like doing it and I want to help owners get to where I am now in terms of feeling free and doing what I want when I want. But when I found out those 3/4 of them don't get there, I'm going, hang on, that's just not on. So my mission is to make sure that all these personal goals, financial goals are understood by the owners along with their business ones, and they get there to make sure that they can fund their desired lifestyle and they're happy doing it.
Well, let's do the case study. You had 3 exits, all right? So what was the first exit?
First exit was a reverse takeover of our business into a much larger business to take over, to actually take over the running of that. That wasn't so much as a financial exit, but more of a strategic exit.
So explain that reverse takeover a little bit more.
We had a management business. We're doing project management and property investment. A larger unlisted public company came to us and said, we'll buy your shares. We'll give you a share swap for ours. You take over the running of our business. We want you to provide a liquidity event for our 100 shareholders. That's your objective. And if you can do that, you own shares in our business as well. You'll get a cut from your equity.
Okay, so there was no planning for that.
That one came out of the blue.
Yeah. So how'd you react to that?
We're in a position that
What was your plan to do with the business prior to that?
we were going to try and raise capital ourselves,
Mm-hmm.
but we didn't have sufficient capital to get us to where we wanted to quickly. We had the IP, but we didn't have the money. Where it turned out, and this was the other company was put in touch with us by industry colleagues. They had the money, they didn't have the IP. So it was like a perfect
So they said,
match.
look, yeah, you guys got money, don't know what you're doing. These guys know what they're doing, but they don't have the money.
That's it.
How about you guys get together and do something?
Get together.
Fantastic. But how do you react to that as the business owner? Because getting in from small organization, how big were you then?
We had funds under management at that stage, probably around $5-10 million.
So smallish.
Yep.
And how big was the company that was taking you over?
Originally, it was 80 million. When we went in, it was down to the 30 million.
Mm-hmm.
We ended up taking that business in 5 years to be worth over 500 million.
Okay. So how did you feel as the business owner?
Excited at that stage, based on where we were.
But what about things? Well, we're gonna lose the control. We'll have to now. We have a board. We got shareholders that we gotta.
We actually didn't lose control. We actually took over the control of the other business. So we had, notwithstanding, we had a board to report to. The management control and what we had, we didn't feel like we lost anything on that. So we still feel, notwithstanding, we were not business owners. We were part business owners because there was another 100 shareholders.
Okay, all right. So you were not like...
We were a shareholder. But
you couldn't call the shots prior to that the way you wanted all the time. So there were processes and procedures.
There was pros and cons. There was so many more pros for that transition than there were cons.
So there was a first exit. Well, it wasn't really exit. It was a kind of change in operations and change in the...
Well, M&A.
Okay.
Merger and acquisition.
Okay.
It was a reverse merger sort of stuff.
Okay, so then what was the second exit?
Part of the strategy with this company that we took over running for was we basically identified who the major competitors were, and we wanted to differentiate ourselves from those competitors. Our very first workshop that we held, as it was myself and 3 other business partners, ironically enough, looked at a majority of the factors, excluding the personal and financial goals, I got to say.
Okay.
But from the business transition planning perspective, we basically took the principles that I now espouse with the transition planning into our very first workshop and subsequent new business plan for this business, in that we looked at what our exit options were going to be within 5 years' time. Our timeline was 5 years to exit the business for those shareholders, existing shareholders. We also looked at what was going to cause people to be attracted to our business? Why would they pay a high premium for our business? What did we need to do? And what other things needed to be done within the business to improve its efficiency, improve its profit, and so on.
So what were the exit options you were considering at that time?
At that stage, there was recapitalisation of, in other words, bringing in another investor to take over a significant portion of the equity. There was third-party sale, basically selling the entity to another investment or strategic purchaser. And it was kind of penciled in, not penned in. They were the primary ones we were looking at. But we thought if we do well enough, there is also the potential of an initial public offering, take it to the stock market.
Okay.
The existing structure was a public company. It wasn't a proprietary limited. It was a limited company, but it was unlisted. So that was a potential, but we kept it on the looking at it. But it wasn't until later on when we grew the business significantly that became more of a reality. They were basically there was two primary exit options and the one I call secondary, which ended up becoming the primary one.
So there was a first exit.
So then the second
one. You worked
one
for 5 years.
Well, there was a middle exit in
There was
between.
a middle exit, yeah.
Part of my role was I looked after project management and infrastructure management business. So we wanted to differentiate ourselves. So I ended up creating a new business within the business, which was an infrastructure management company. That was to, again, differentiate ourselves from the competitors, to make us different and make us potentially more attractive in the future. And it was the right strategy to undertake. Because we knew we had third party offers come in and they were attractive to the whole business. That changed though when we got to the point where the public listing on the stock market became the real offer, and then we were advised that hang on, this having an investment fund business and a management business in the same entity could be a bit too complicated. So we then decided, right, we have to sell the infrastructure management business.
How big was the business then?
Had assets under management of about just over $1 billion, and it was turning over about 4 million revenue per annum.
Okay.
So that was then tasked for me to sell the business. And again, going back on the principles that I now look at as part and parcel of transition planning, I was able to get that business into a state that was sold very quickly for a good price, but even more importantly for me, and I'll say I was the owner per se because I was the managing director of that entity.
You were running
I was running the gig.
Yeah.
For me, the important part as well was I did not have to go with the purchaser. So I'd created the business so it was standalone and it didn't need me as part and parcel of its value, which is one of the owner independence part. So we sold that, and we had to sell that prior to us getting our plans together for the IPO, which ended up happening a year later.
Okay.
Which was the third exit.
So that was the third exit. You still got shares in that company? Or?
No, I don't have any more shares on that one. It's actually, it went public and then it's actually now been taken off the stock market.
Went private again?
Yeah.
Okay, so it's still running?
Yep. Different name, but it's still running.
Okay. So we're not going to mention any names or anything like that to protect innocent and guilty. All right, so 3 exits, but you never touched on that personal issue. You were not that connected to it.
Actually, for the third exit, it was considered because I knew after the second exit, which was just purely internal business exit, when we started looking at it, was getting closer to let's call it it was realistically the biggest financial transaction I was ever going to do in my lifestyle.
Yeah.
And that's basically the same sort of thing that most business owners have when they sell their business. It is the biggest financial
Transaction.
ever in their life. I don't know why, but I had done my own financial plans. I knew how much I needed. I'd even written it down. Funny enough, I only saw it a couple of months ago. I had written it down probably 4 years prior to the big exit about what I really wanted and needed to actually do and what I wanted to do after I exited. So I did have those personal plans in place, probably not as detailed as what I would do today, knowing what I do know.
Yeah.
I had the financial plans in place as well. Again, probably not as detailed, but it was pretty good. So it did address those issues.
Knowing that, how do you think it was helpful?
Very much. And I'll tell you why, Zoran. I went into the transaction knowing what I needed to get to, and if I got to it, happy day. I've done all the planning. Okay.
And you knew why you were doing it as well.
Exactly. It's like saying I want to go on holidays. I know I want to go to Port Macquarie for my holidays, and I've booked everything. Everything's ready to go. Versus I know I want to go on holidays. I'll just jump in the car and I'll drive somewhere.
I'm leaving tomorrow, but I've got no idea where I'm going.
And I don't know if I'm going to like it or not.
Yeah.
I knew I was going to a certain place. I knew what it was going to deliver to me. I had peace of mind knowing that, and I knew that when I got through that exit, I would have freedom and happiness because I was reaching the goals that I wanted.
You mentioned 8 different exit strategies early on. What are they?
So you've got the 3 that I touched on from an external perspective, which is third-party sale, recapitalisation, initial public offering, and that's realistically not available for most, or definitely not available for small businesses. Mid-cap size businesses maybe, depending on the size, but let's say there's really, for SMEs, there's 7 options. Forget the IPO.
Okay.
The other one, which I call external options, is a liquidation, and that could be liquidation of the assets. It could be a controlled liquidation. So that's what I would call external exit options, and then there's 4 internal exit options. And those 4 internal options can be the family transfer, it can be a management buyout, it can be an employee share option plan, or it could be selling to your existing business partner.
Mm-hmm.
So they're the 8 options that are open, let's say 7 to most business owners.
Well, we mainly, like majority of our work is third-party sell. And this could be to individual or could be to another business, strategic buy, but it's a third-party sell, either way you put it. This handing over business to family, are there any, because we see that a lot, and it's a good thing when done well. It's absolute disaster when not done so well. Are there any tips on that?
I'm dealing with a number of the people who are actually it's called Family Business Association, who specialise in helping family business owners. The psychology of a transfer to family members, what goes through the different family members and how it's all done, that's well above my pay grade. If there's ever a family transition that I'm involved with, I bring in specialist family business advisors who know how to work through the dynamics of a family issue, which could be, it could break the family or it could actually galvanise the family. Depends on how well it's done. They look at things like, is there an existing family charter? Have there been questions asked about succession? Are the people who within the family who the business is going down to, are they really the right people for that transition to be done to? if there are other family members that haven't been involved in the business but also expect a piece of the pie, if it's, moved from mum and dad or uncle and auntie, whatever it is, how are they treated? Is it done on a fairness or is it based on an equity basis? Should it all be equal or should it be done fairly? A lot of these questions, the family members are too scared to ask because they're concerned that it actually might have conflict. A lot of the time I hear that the actual owners of the business end up going to the grave because they didn't ask those questions. It gets passed down to the family members and all of a sudden it becomes conflict because a lot of the issues hadn't been addressed previously. So again, if you're a family business owner, I'd be very much, I would recommend they should consider thinking about how they're going to do the succession and asking a lot of questions about, is it right? How is it documented? Is everyone on the same page? Is everyone communicated to? Again,
it's complicated. It's very emotional.
Same thing with no shocks.
And like you're working as a transition advisor. Well, that is a transition and it's a complicated transition. Look, often we're selling a business that has got some, sons and daughters in the business and but they don't want to take over the business and they're working in the business and the purchaser goes, why didn't they take over the business? Because it's complicated.
Many reasons.
Many reasons. How long do you have?
Yeah.
So not every business gets passed on to the family and for reasons that you just described. So sometimes the sell to the third party is the only option.
And so many times you hear the story about that the parents think that the kids want to go into the business, but they never ask them. And realistically, the kids don't want to go into the business. They're off doing something different.
Okay, so you brought them into the business. I had that experience with some of the large food businesses, very, very profitable food businesses, which was a first-generation migrants. And I remember to one of the owners talking, and I said, how come the rest of the family is not in the business? He goes, well, see, when I started, it was really hard. So I really wanted them to have a good education and everything else. So they're all now doctors and lawyers, and I'm making way more money than them, but I gave them all the houses and everything else. And, well, I didn't give them, but through what I provided, they set themselves up, and I helped them out. And now I want them to take over the business. I said, I can't understand. Like you're working there for 200,000 where you can make millions there. But they got it all. So he goes, we over-educated them. They just don't want to take over the business. So the only option is now to sell. But that's not a bad thing. Look, it comes down to the business owner, what he wants to do, what your inspirations are, what the family inspirations are, and you got to kind of marry it all together and do the best thing.
And it's exactly the reason why this transition planning needs to be done very early, because those sort of questions get asked. And
you can't answer them right away. Sometimes you just
take a while to sort it out. But if they say, oh, yeah, I'm thinking about transitioning it to the kids, okay, are they aware of that? And if you can find out at least some direction of where the business is going, if the owner then can plan that way and build the business or
correct. And to find that out, I mean, you come to your daughter and say, listen, I've been thinking, would you take over my business? Well, she's not going to make a decision on the spot. Yeah. She needs to think. She may got to have family, all right? So she has to talk to them. It's a big decision. It may going to take 12 months, 2 years.
And she may also not be qualified to do it properly to the owner's requirements. So there's a whole raft.
Correct. So she wants it, but then you got to up her skills, and the process is pretty long.
And it's again, flip it around the other side. Oh, I thought I was going to get the business, Mum and Dad. Well, why are you selling it?
Yeah, what's going on?
We never had that conversation, did we? We should have.
So why do you think people leave it for very late in life? Okay, there's sometimes circumstances and something happens in life and in the business, and you're forced to make a decision, but often there isn't. So why people don't have these conversations early?
Because they don't think that they've got more pressing things today. There's problems they got to sort out and all that.
Urgent but not important.
I can do that tomorrow. and then I'll do it again. I'll do it next week, and so on. And it just gets pushed out, not understanding that some of those things that should be done today actually can help them solve their problems that they're addressing each day and each day. So I think it's just human nature. Sometimes we just kick the can down the street and we'll address that issue later, especially if it's a difficult issue to address. They may not just want to address it. They may not want to do it by themselves. They may want to have someone else become the bad cop to ask the questions.
Okay.
There's a whole lot of psychological reasons why owners may not want to address certain issues. And it's not an easy journey. There are questions that have to be asked, but it's a lot better. It's a bit like ripping a Band-Aid off. You do it quickly, get it out of the way, and you move on. If you leave it and it just gets worse and worse, and then later on they get into that situation when they're just about to sell, and then they realise, oh, hang on, we've got all these other issues. I don't want to sell anymore.
Look, it is a hard journey, but I think it's very important. And it's hard at the beginning because you got to really force yourself to face some demons. But once when that's resolved, then you got a really clear goal and a really clear target, and it becomes so much easier. And it becomes a pleasurable journey. The exit becomes something that you really want to do, and because for all the reasons we talked today, but also you know exactly what's on the other end for you, especially if you get yourself in that situation that you got enough or more than what you need for your lifestyle.
Yeah, it's business owners by nature. Well, you're entrepreneurial because you started a business. So you've got a special DNA in yourself anyway. But a lot of the time, on top of that, they just like having that control. They're the owner, they're the boss. If you can get into a situation where you have peace of mind knowing that you've done everything you can to know that whatever comes your way, it could be an acquirer knocking on your door tomorrow saying, I've got an offer for you. It could be something on the dark side, like the owner could get crook, or there's a disability, or there's a disagreement between the shareholder, the other partners, or there could be distress, financial or mental. Doesn't matter because they've already planned it. They've attacked, as you said, they've addressed the demons from the past. They've got a way of making sure that whatever threats come to the business and themselves, they've already planned about how they're going to address it. It gives them that peace of mind and control that they can then choose when they want to go and see Zoran to say, look, I'm ready to go to sell the business, or hold on for a little while longer, or whatever it is, but it gives them that freedom of control.
But that's another thing. Going through the process, you're very quickly going to realize if the business relies heavily on you, that the value is not as good in the business, and liquidity is not as good when the business doesn't rely on you. So sooner you realize that, sooner you're going to start working on making business less reliant on you, which means you're going to have a better business, probably going to make more money, and it's going to be easier to run. So your life, even before you exit, is going to start improving.
It's a win-win-win.
Yeah, absolutely. And, start early. And now I'm going to ask you some hard questions. This was fantastic, all right? Really give me, at least I understood exactly what you're dealing with on a daily basis, and I hope that a lot of people are going to reach out to you and have at least conversation with you to see if you can help in that particular situation. How long is the process, and how much does it cost?
It's the process to do a transition plan can be anywhere between 12 to 20 weeks, depending on the time frame to do the discovery. Depends on the complexity, how many owners, how many other stakeholders are involved, and all that. And that's also what determines the price, because until you know the scope and the complexity and what's required, what needs to be assessed, what needs to be basically strategized, how bad is the situation and all that, or good, it's very hard to put a price limit. But you're looking on, if you're talking ranges, you're not talking single digits, thousands, you're talking tens of thousands of dollars. But in terms of cost, it's probably looking at it from another angle. What value would it be to the owner to know that they've got something put in place that can add significant value to their business, but also intrinsic value, knowing that they've got peace of mind, knowing that their financial and personal plans are now in place, and whatever happens, they're got it. They're happy days. I remember looking back on it from my perspective, looking at what I did prior to that IPO exit and having my personal and financial plans as well as knowing where the business was going. If someone said to me, what would you pay for that? To me, it was a MasterCard. It was like, you couldn't pay it. The inner peace it gave me, it was basically incalculable in terms of that value of. So, yeah, the value of it is really dependent upon what the owners see as their end result.
So how does a process work? Let's say somebody's interested in planning the exit.
Yep. They
call you up, and what happens then?
I'll go through. Well, first of all, we decide if we're a good fit for each other. Whether they like me, because I'm going to have to develop a lot of trust with them, because I'll be asking them a lot of questions eventually that delve quite deep into their personal side, financial side, business side. So there needs to be a development of trust that they think that I can actually do the right thing for them, and I'll have their backs. That is part and parcel of what I do, is to make sure my fundamental mission is to protect the owner and get them to where they want to be. I'm different to a business coach, which is looking at just the business side of things. My primary client is the business owner, not the business. So we'll go through a few discussions, meetings. If the owner then wants to continue to keep the conversation going, I'll ask them more deeper questions to get me an idea of where they sit with their business and financial and personal situations, to a point where I can say, you know what, I can now give you a proposal about putting together a transition plan.
So is there a charge for the first part?
No.
Okay.
So it's complementary discussions.
So let's sit down and have a good conversation to see where you want to go,
what
I can provide. Does this work together? And then I'll say, okay, here's the proposal. This is how much it's going to cost. And this is what we're going to, in which direction we're going to go and what we're going to investigate.
Yeah, all the details I run through in my proposals, the steps, how much time is going to be needed by the owner, in that process, the outcomes of what they're going to be delivered. And the
so how much time of the owner is required for that? I know it varies, but
it varies. It could be over that period of 12 to 20 weeks. It could be total 3 or 4 days, sort of.
Okay, so we're talking
hours
per week.
Yeah,
few hours per week, 1 or 2 or 3.
At the front end, the discovery and the interviews and all that. That's where the main part of the time is taken. Then as we go through workshops, once the results come up, we present the findings to the owners and their stakeholders. That's towards the tail end.
And then who implements that plan? They do, or you help them out, or there's option to do it either way?
Yeah, they got 2 options. So the plan, the blueprint, as I call it, is there it identifies what needs to be done. It identifies who should be doing it. It's basically a great project management plan that they can go away and do it themselves if they wanted to. If they don't want to spend the time coordinating the different people and making sure that all the actions are being done in the right timeframes and all that, they can engage me as well as a follow-up service to basically project manage that process for them. And then I look at that as like 3-month mini projects at a time. any time during the process, the owner can say, okay, we're done. I'm ready to move direction, or I don't want to do any more. So it's quite flexible with that.
But so you're going to give me a plan. I'm going to have a desire where I've got my goal, where I want to get. Do you ever, or how often would it happen that when you do the plans, I mean, what you're trying to do, it's going to be really hard to achieve?
That part of the trust that I talked about earlier, the reason why that's essential before they even engage me is because I will be black and white. If I don't think that it's the right thing for them, I will tell them.
So the conversation about what the business owner wants to do and how to get there, to some degree, it's done before the engagement. So then you can say, look, I can do this for you, or there's a good chance, or I can't do that for you. I'm not the right person yet.
Yeah, I get a fairly good idea about what the person's like. I'll give you an example. If someone was to say, if I was to say, you know, what's really important for you in a business, and, you know, do you think you could sell it easily? You get the I just get the feeling pretty quickly whether or not it's going to be difficult for that owner to let go of the business. And then I'll say to them, if I'm feeling that, I'm saying, do you really think you can let go? Because this is a process that you're going to have to work that through, or is it something that that's a bridge too far, that you'd be able to really personally let go of that? They can't answer that straight up. I throw them questions that I hope they think about, they sleep on, and eventually get them to the plate where they say, this is where it sits.
Yeah, I've been thinking about it, and this is where I am,
Yeah, a lot of the questions I will ask, they've never been asked before. It does take them thinking deeper than they ever had, and a lot of the time they go, yeah, wow, okay.
It sounds like a really good emotional process, like deep emotional process. And you have to go through that, because we get them on the pointy end when they need to sign and they start thinking about it, and then the pressure and everything else with it. And it's not a good time to make a big decisions when when you're under a lot of emotional pressure. Yeah, so you make it way early in the piece going through this process.
Again, going back to that no shock thing.
Yeah.
The shocks have to happen right at the front end. Then they've got time to think about how to manage the issues that have been brought up. Some of them may not be able to be resolved, but it's better to find that out early days before they go down the wrong road than going down that road, then realising they've got big problems. It's not really going to work out for them. So it is really it's a risk management approach. It's understanding what are the risks, what are the benefits. Okay, great, they're the benefits. How are we going to sort these risks out? How are we going to, in case they pop up? And then there's nothing worse from anyone, be a business owner or anyone, to be put under pressure and ask for decisions that just pop up, and they're big decisions. It is a lot easier to manage issues in a stressful and pressured situation when they've already been considered in the past and going, you know what, I actually had planned for this situation, or I had an idea.
Correct. Even though you when you're running a business, you make those stressful decisions very quickly, but none is as big as this.
This is their biggest financial play they're ever going to do potentially in their life. There is no bigger from their business and financial perspective than making those sort of decisions. So it is a critical part. They say buying your house is a big part of your life. Yep, it is. Getting married is a big part of your life, having kids and so on. But if you're a business owner, how you transition out of your business, that is as equal big issue in your life, if it should be done properly.
But financially, definitely the biggest one.
Yeah.
Look, it's a good place to end this conversation. I learned a lot. I really did. And it made me think about my business and myself while you were talking. So...
Well, that's good. I've already done the right thing. It's making you think deep, and if all business owners out there can think deep, great.
And look, I really think that we need more people that do work that you do to help business owners exit. And if somebody wants to talk to you, how do they find you? Where do they find you?
Best thing to do is to go to my website, which is www, as all websites are, boyerbusiness.com.au. That's BOYER business.com.au. On the website, there's some buttons that you can find where you can actually book an introductory call with me, and we can have a chat and see where it goes from there.
Fantastic. Well, thank you very much for talking to me today. It was a pleasure talking to you.
Thanks, Zoran. Pleasure. Cheers, mate.
Need help selling your business, buying a business, or a business valuation? Exclusive Business Sales award-winning team are here to help. Our experience, skill, expertise, and professionalism, backed by our triple guarantee, is assurance for your success. The largest network of buyers and our national coverage will help you throughout Australia in all state capitals and regional areas. Exclusive Business Sales. Sell your business with certainty.